Hello, everyone. Welcome back to the Daily Gold YouTube channel. With me here today, he's returning guest. He is Jared Dillian. You can find all his work at jareddillian.com, also jareddillianmoney.com. Jared is the publisher of the Daily Dirtnap, a daily market newsletter. He's also a prolific author, has written numerous books. His latest book, Night Moves. And Jared, before we get to markets, why don't we talk about night moves for a minute? You said this was not inspired by the Bob Seger song, but nevertheless, great title. Can you tell us
Yep.
about night moves and where people can go and get a copy?
Yeah, so Night Moves is a short story collection. Um, it's 16 short stories, literary fiction. Night Moves is the name of one of the stories, which incidentally is about a DJ in Miami who has an affair with the mom next door. Um, it's a pretty dark book. There's a couple stories with happy endings, but for the most part, they end not so well. But it's brilliantly written. It's done very well. I mean, relative to most short story collections, it's sold above and beyond my expectations. It's got 4.7 on Amazon with 104 reviews. Highly recommend you check it out. Go to Amazon and get Night Moves.
Okay, great. Yeah, I'm definitely going to get myself a copy. And talking about things not ending well, let's talk about the U.S. economy, economic policy, the Federal Reserve, all of that. So many questions to get into, but I guess first things first, let's talk about gold. I did see a tweet, I think you put up around a month ago or so, talking about how you think gold's move for the time being had ended. That was a very or some great foresight by you. Gold has corrected about 10%, although it has rebounded the last 3 days. Please give us your latest take on gold.
Yeah, sure. I look a lot at technicals. I look a lot at the mark indicators. Gold just put in a perfect DeMark 13 sell up around the highs, and it corrected down to 25.40-ish. 25.30 is support. That's the level from where it broke out from a couple of months ago. So it held its support, trading 26 something right now. Honestly, I think gold is in a little bit of a bottoming process. I think it has some more basing to do before it makes another run at the highs. I think it's going to take a month or more in order to, form that base. But I'm constructive on it. I mean, ultimately, I do think we make new highs. I do think it goes to 3,000 next year. I think that's all in the cards. But I think the next couple of weeks are going to be frustrating for the longs. I think we're going to be hanging out in the 25.40 to 26.20 range for a while. So,
Yeah. And I always like to talk about the stock market against gold. I mean, you've probably noticed if you're looking at least from my perspective, gold against the stock market. I've been hoping that ratio would break 0.50 forever. If you go back the last 5 years or so, it has not made a higher high yet. That's the very interesting thing to me. So, I mean, do you have any insight or any thoughts on that? I mean, obviously, the election of Trump, the Republican sweep, uh, people are more optimistic about the economy and stocks now. Whether that's sustainable or not in the short term, we'll see. But yeah, with that being said, talk about gold in relation to the stock market right now.
well, I mean, I don't really think about, you talk about the Dow gold ratio or the S&P gold ratio, like, that, I don't really look at those ratios on a daily or even monthly basis because they really only matter at the extremes. Um, if you want to talk about stocks, very quickly after the election, we priced in 4 years of good things happening under a Trump administration. Markets backed off a little bit. I think what you're going to find under Trump is that he's not as bullish for the S&P as you might think he is. Um, he wants to go after credit card companies. He wants to go after food. He wants to go after pharma. He wants to go after, I mean, probably 50% of the S&P is, and this, Trump is a populist at the end of the day. He's not a small government conservative, although I think he's surrounding himself with people who have small government instincts. But if you look at people like Josh Hawley, who should know better, it's becoming a party that is very anti-big business. I think you could make the argument that a Harris administration would have been more friendly to your 401k, would have been worse from a tax standpoint, would have been tremendously worse in terms of taxes, but just in terms of a corporatist sort of philosophy, I think could have potentially been better. So what I think we're going to see is I think we're going to kind of chop around in this range over the next couple of months until the inauguration, and then we're going to start to see the sparks fly. We're going to start to see what kind of executive action Trump is going to take, the types of things that RFK is going to do to the pharma industry, et cetera. I am actually short pharmas under that thesis. I think they have a tremendous amount of downside. So I'm not necessarily bullish on stocks here. I'm not.
Yeah, a follow-up to that. Trump is very populist, as you said. How do you square that away with or how does anyone square that away with his obsession with the stock market and it going up? It seems like they're kind of potentially diametrically opposed if he's going to be attacking various companies and looking to make significant changes.
Well, interestingly, he hasn't really said anything about the stock market throughout the campaign. He hasn't said anything about it since his first term. In fact, he stopped talking about it when COVID happened and the market went down 35%. So, I mean, in the beginning of his first term, he was tweeting about it every single day, but since then, he hasn't. Um, yeah, I don't know. I think I think Trump is good for the economy. I think he's good for small business. I think he's good for people like you and me. I think it's going to be a low tax environment. I think all of these things are good things. But when you look at the types of companies that has expressed not anger, but concern at. I mean, these are giant corporations. This is the stuff that people are holding directly or indirectly in their retirement accounts. So yeah, it's going to be interesting.
Okay, so getting into next year, what does that mean for Fed policy? Do you think that um, are you more of the view that we could see inflation reaccelerate and we won't have a recession, or at some point the downward pressure will move us more towards a recession and therefore the Fed will have to ease more? I mean, have you thought about that yet, or you're just kind of agnostic right now?
No, I can talk about that. So I think that monetary policy, I think people were expecting a long, protracted rate cut cycle that would extend into 2025. And I think consensus has shifted on that somewhat. I think most people expect 100 basis points of cuts. So 50, 20, and 25. We're going to get 25 in December. And then I think the Fed is probably going to pause rate cuts for a while, at least until the end of 2025. You've heard some of the Fed officials talking about the effects of the Trump election on the economy, how we could have a higher growth rate, how the economy could tolerate higher rates. Cash Carey was talking about that. And not to get too conspiratorial, but the Federal Reserve is made up of 90% Democrats. I think they would like to see Trump fail. I would not be surprised to see them hike rates despite Trump. As you know, Trump has made some noises about replacing Powell. Powell's term is up in the beginning of 2026. I'm not sure who he has in mind for Fed chair. Looks like he's going to put Kevin Warsh in charge of Treasury, maybe. So maybe Kevin Hassett at the Fed. I'm not really sure. But there's going to be a lot of fireworks there between Trump and the Fed. You can be sure that it'll be like 2017, 2018 when he's tweeting about the Fed nonstop, if and when they start hiking rates in 2025. So,
Okay, but I mean, presumably, so based on that, that would be more on the side of that we are kind of achieving a soft landing or a no landing, and then
Yeah,
we.
I mean, with regard to the economy, I look at the end of 2023, I thought we were headed into a recession. Bond yields were going down, the data was deteriorating, and then Deus ex machina, the economy did not go into a recession. In fact, it had a pretty strong 2024. The economy is still strong. Honestly, I think the rate cuts were a mistake. I think the Fed was spooked by one bad payroll number and a series of claims numbers that were a little bit above trend that supposedly triggered the SOM rule, and I think that's going to turn out to be a mistake. So I do think there's the economy. I don't foresee a recession, and I think it's very likely that the Fed takes back those rate cuts at the end of next year. So.
Okay. So thinking about the bigger picture over the next 4 years, um, with respect to gold, what do you think are the potential major catalysts? I mean, we talked about it the last time we talked earlier this year, and you talked about how gold could potentially go to 10,000. Do you think those things are still on the table, or could Trump and the administration bring in some new policies where they really cut spending and they throw a monkey wrench into all that?
Well, I mean, the last time we talked, that wasn't even a twinkle in Trump's eye. This whole idea of the Department of Government Efficiency, that nobody was talking about that at the time. Um, I I don't think that Elon Musk has said that he could cut $2 trillion out of the budget, which is 6.5 trillion, which is up from about 4.5 trillion in the last 6 years. So we've had an enormous expansion of spending in the last 6 or 7 years. Kind of tough to cut 2 trillion out of that. About 85% of the budget is Medicare, Social Security, defense, and interest, right? So you can cut a couple of million of underperforming government employees and cut a couple 100 billion of expenses, but you really can't make meaningful cuts into the deficit unless you touch Social Security and Medicare, which Trump has said he's not going to do. There was actually John Fetterman, the senator from Pennsylvania. He was asked whether he would vote to confirm Robert Kennedy. And he said if Robert Kennedy pledges not to cut Medicare, then he will vote for the dude. That's what he said. So there's, I think there would be no, I know there would be enormous backlash if there were any cuts to Social Security or Medicare, whether in the form of um, raising the retirement age, or means testing Social Security or doing things like that. There would be sort of an outcry about that. So really, I think we're stuck with this structural deficit problem that we can kind of, hack away at incrementally, but we can't really make meaningful progress. So from a deficit standpoint, honestly, it looks a little bit better than it did 6 months ago, but it's still checkmate. We're still going to get to the same place eventually where we're going to have to monetize the debt. And honestly, I think that could happen in Trump's term. I think it could absolutely happen. JD Vance was being interviewed by Tucker Carlson, and JD Vance was talking about the debt problem, and he talked about it as a national security issue. And Tucker Carlson asked him what he would do about it. And JD Vance was kind of coy, and he said, well, we'll just hire some really smart people at Treasury. And I think what he's hinting at here is I think he's hinting at debt monetization. I think that's what he's hinting at. I think he's hinting at controlling the yield curve, keeping interest rates low. And like I said, that could happen in the next 4 years. And that is when gold explosively goes higher. So
Yeah, well, yeah, as the Daily Gold, would love to see that happening with, as small amount of pain as possible, to everybody who's not in precious metals. Yeah, let's talk about interest rates in the bond market because, long-term bond yields, those have been picking up considerably. Do you have any thoughts on that, and do you see like a potential level that, could be like an inflection point for this whole situation?
well, I do think bond yields are topping as we speak. And if you look at what happened on election night, there was a big move in the bond market. Yields went up about 20 basis points across the curve, but then they kind of stopped and they've been consolidating around this level. And honestly, I think the next move for rates is lower. And I don't know what the catalyst is going to be. This is me just reading the charts. Maybe we get some soft economic data, maybe who knows. But I do think that 10-year notes are going to head back to about 4% before we get another move higher in rates. So,
Okay, so that would, and how do you think that will impact markets, or will it not? And we'll kind of just see the same thing where stocks and gold have been going up together.
um, I don't know. I mean, it could be. Like I said, I don't know the catalyst. This is just me reading charts. I can think of a number of potential catalysts. We just authorized Ukraine to fire long-range missiles into Russia. Maybe this causes some unintended consequences, as it probably will. Maybe it's something that happens in the Middle East. Maybe who knows? I think stocks and bonds have been positively correlated. I think if we get a move lower in rates, it will be um, correlated with or because of a move lower in stocks. And this is very short-term stuff. This is just in the next couple of months.
Okay. Um, yeah, so moving forward, are there any, I don't want to say black swan, but are there any things in the coming years? I mean, the Trump's next term that you think maybe the market's not focused on, but could become important?
I mean, we could see the end of the Ukraine war. That's a possibility. Which would be interesting for commodities generally. When the Ukraine war started, commodities gapped higher and then they went lower for the next 2.5 years. So it wouldn't make any sense, but maybe commodities actually go up when the war ends. I'm not really sure. That's possible. Um, yeah, that's really the only thing I can think of at the moment.
Okay. Any thoughts on the gold stocks and gold miners, or do you pretty much think about it, it's similar to gold?
Well, I will say that gold miners have had a horrific drawdown from the highs. It's been a 25% drawdown, which is insanity given that you've had about maybe a 7 or 8% move in gold, or even less than that. I was shocked to see that. I was shocked. I don't really have an answer. I have exposure to gold miners. I own a lot of them. I have for years. The GDX got up to about 44 or 45. Now it's trading 37, 38. It's very discouraging, owning gold miners for the last going back to 2011 has been very discouraging. Um, but you know what? I continue to hold them because in the event that gold goes 2x or 3x in the scenarios that we talked about, gold miners should go up 5x to 10x, and that's why you hold them. That's why you continue to hold them. But like I said, I was shocked to see this latest drawdown in the miners. So.
Yeah, so talking about gold potentially going 2x or 3x, what is there something we could look at as a hint that would happen before that would happen, whether it be in the markets or a policy or a market reaction to something? I mean, I don't like the word catalyst because markets kind of move before people know what the catalyst is.
Yes, absolutely. I
Um,
100%
so
agree. Yeah.
so I'm just thinking about what. Okay, I mean that all sounds great to us here at the Daily Gold podcast, but what would be something that we could look for or see in the market or anything that would tell us, yes, it looks like, gold could be getting warmed up for that move.
Well, I would say it would be sort of a slow moving catalyst. Basically, the idea that DOGE, the Department of Government Efficiency, is not succeeding. I think when you start to get the first indications that that the deficit is an intractable problem and can't be fixed, And either Elon Musk steps down or Vivek steps down or they both step down and that whole idea goes away, I think that would be a very bullish catalyst for gold. I think one of the reasons that gold pulled back, I mean, I think it pulled back for technical reasons, but I also think it pulled back on this idea that Trump is maybe bearish for deficits, right? That he actually is, what his first term as president, deficits went from about 700 billion to a trillion in his first term from 2016 to 2020. Now he's starting from a base of 1.8 to 2 trillion. If deficits aren't going down, then it should be positive for gold. So,
Okay, and I think 3,000 is the target you have for next year
yep.
for gold. What I mean, sorry to ask you these constant hypotheticals, but if gold does better than you expect next year, so in other words, what would it take to get it above 3,000? Is it something different than what you just said? Or I mean, what if gold rebounds, it goes to 3,000, but it does even better than you and perhaps I think it will do. What would be the reasoning behind that?
Well, first of all, 3,000 it sounds like a big move, but it's not really a big move. It's only about 12%, and gold went up about 30 or 35% this year. So, 12% in the context of, gold at 26 something is really not insurmountable. I don't even think it takes a catalyst, I think if you were talking about gold 4,000, then you'd say, okay, like you would really need a catalyst to get it up there. But I think you could get it to 3,000 just on an above average year for investment demand, you know, and China buying. That's the part that I left out. I'm still operating under the assumption that China is still buying gold. They kind of deked everybody last year. They said they were done, but they weren't done. They're still buying. So there's still that underlying bid. If that persists, then yeah, we should get gold to 3,000. So,
Jared, before I let you go, anything you want to comment on with respect to markets or anything that's on your mind I didn't ask you about?
honestly, I think we covered everything. I think, the one thing I will say is that, sort of gold has been kind of an unusual commodity because we've had a bear market in all commodities pretty much except for gold and a couple other ones like coffee and cocoa and stuff like that. But it's been a pretty vicious bear market for commodities. And I actually am of the opinion that back in July or August, we put in a panic capitulation low in commodities, and we're forming a base. And I think the rest of the decade is going to be inflationary. I think it's going to be bullish for commodities, the whole basket. And gold is a part of that.
And just a quick follow-up. So if you see a big move coming in commodities, obviously, yes, gold is a part of that. Is there a commodity that you like best?
Um, no, not necessarily. Not necessarily. I'm just talking about the index. So
Right. Jared, thank you so much. Before I let you go, please again tell our audience where they can go to follow all your work, sign up for the Daily Dirt Nap, and buy a copy of Night Moves or one of your other books.
yeah, you can first of all go to jareddillianmoney.com. That's my financial publishing company. You can go to dailydirtnap.com for a subscription to the Daily Dirt Nap. If you mention the podcast, you will get a fancy discount. And here is Night Moves, my latest book. Highly recommend you get it. Everybody loves it. So Night Moves on Amazon, and I have a bunch of other books. I have No Worries, which was my previous book, which is a personal finance book, and three others. So,
Jared, thanks so much for coming on. I and my audience, we really appreciate it, and hope we can do this again sometime next year.
yeah, absolutely. Thank you.
Thank you for tuning into the Daily Gold podcast. For more interviews, editorials, and analysis, log on to thedailygold.com. And for premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.